why are we still talking about the movie theaters as if they're dying? No, really, why? Hey everyone, this is Kevin T. Rodriguez, film critic of iCritic.net, and if this is your first time here having discussions about, movie theaters, movies, entertainment, things like that, please do me a favor, hit that subscribe button and smash that like button, and leave a comment below on topics you might want to see talked about on this channel in the future. So anyway, without further ado, let's talk about AMC. So the AMC stock is soaring, and it's soaring because it's seeing profits at pre-COVID levels. Very, very impressive because we're not at pre-COVID attendance. The movie theaters are still in recovery mode. There's still the Omicron variant out there. It's still going to be about another year or so before movie theaters have any sense of normalcy, and yet the money that they're bringing in is comparable to pre-COVID, which means once they actually do fully recover, movie theaters may just be fine. I mean, granted that the movie studios don't cut off their nose to spite their face and put everything onto streaming. I suppose that's still a thing, but then when you see Spider-Man making over $1 billion and you see, Sing doing better than expected, and, why would you want to? Why would you want to? I mean, I know some people have always said, oh, well, they think it's more profitable to have subscribers. It's like, yeah, it's more profitable than having subscribers. Having subscribers and having ticket buyers. I don't know why this has to be an either-or thing, but yeah. So, now here's the funny thing about this whole thing. I made a video a while ago. Let's move this over here a little bit. On my channel in October 2020. Motley Fool believes AMC is poised to be the hottest stock of 2021. And the reason I want to bring this up is because Mark down here, let's see if I can't move this over just a little bit more, said, this is crazy talk. You would have to be a darn fool to invest in AMC stock, and I am an AMC Stubs member. While you're at it, you might as well buy GameStop stock. Oh boy, has this not, did this not hold up well. Granted, when this video was made, it is true, AMC was looking at bankruptcy, potentially. And when the meme stock thing happened with GameStop and everything, holy cow, did that change everything. That changed everything. And for the record, I am an AMC stockholder. I sold a lot of my stock a month or so ago, well, not a month ago, several months ago, when the stock was around $60 a share, and I heard about, putting more shares on the market. Sorry if you heard that, my chinchilla decided to play around. I decided to sell, that was a good time to sell, and I've only held a couple shares since then. It's mainly for the free popcorn and drink that they give investors. But yeah, I always knew that AMC would recover, and I might buy more. I'm not saying you should. Talk to a financial advisor, talk to someone who knows what they're doing. AMC might be a bad investment at this point, but it's at a price that I'm kind of comfortable with again. I mean, you see here it is. It's like at $16 or $17 a share. And, I think it could probably get higher than that, but I might get back into it. So anyway, let's look at this article real quick. AMC stock was soaring Tuesday after the movie theater chain said it saw the most profitable quarter by some measures since before the onset of the COVID-19 pandemic. Shares in AMC, a favorite among retail investors, shot up 10.4% to $17.73. I guess it's dipped a little since this article was written. The stock has fallen nearly 35% so far this year, in tandem with other meme stocks that are feeling the pinch from the prospect of higher interest rates from the Federal Reserve in 2022. The company released preliminary unaudited financial results for the final 3 months of 2021, revealing sales of approximately $1.17 billion, ahead of the $1.09 billion estimated by analysts surveyed by FactSet. It would be the highest quarterly revenue in 2 years. Earnings before interest, taxes, depreciation, and amortization, a key adjustment of metrics and profit, is expected to be $146.8 million and $151.8 million for the quarter. That's far ahead of the $82 million expected by Wall Street, and the most profitable the company has been based on that metric since the same quarter in 2019 when AMC recorded a EBITDA of $269 million. Now, if you've viewed my Apptrepreneur channel, you know how I feel about EBITDA. I think EBITDA is not a good thing to do. I think it's, basing future profits on today's stock price. And I recall Enron got into a lot of trouble for doing something very, very similar. Nevertheless, this is the metric that they are using, and apparently that's a metric that looks pretty promising. Now, that said, there's a little bit of a catch. On an unadjusted basis, AMC said it is expected to see a net loss of between $114.8 million and $194.8 million. Estimates were for a net loss of $119 million at the most optimistic end of AMC's range. AMC's 2021 results improved significantly as the year progressed, and we finished the year with the strongest quarter in 2 years, said Adam Aron, the company's chair and CEO, in a statement. Benchmark analyst Mike Hickey said the results from AMC reaffirms our belief the domestic box office continues to bounce back from the pandemic-influenced downturn. AMC was very profitable on an EBITDA calculation and delivered strong positive cash flow. So again, I have issues with the EBITDA model, but at the moment I'm going to temporarily put that aside. For better or for worse, this is the metric that analysts are using, and the analysts are very happy with AMC right now. And it should also be a wake-up call to the studios, because, the studios had like almost 2 years to convince people to never go back to the theaters. And they probably have convinced some people to stay indoors. One thing they failed to do, though, is they failed to show how this model is profitable. Because when they sell the movies for $20 on, iTunes or Vudu or whatever, people balk. They freak out. $20 is too much. And Disney really didn't make much headway with Mulan, Jungle Cruise, Raya and the Last Dragon when they were charging $30 for their premiere all access. They did slightly better with Black Widow, but that's because Marvel fans had a way to buy the movie and watch it over and over again, which they would have done in theaters, and they would have spent 4 times as much money doing so. So I don't know why, they brag about, oh, look, we made $30 million on Disney Premier Access. It's like, yeah, and you won't make any more. Yay, that's a success, isn't it? So anyway, I do think that the day is coming where not only AMC, but Cinemark and Regal, they are going to have a little bit more leverage over the movie studios. Because, stockholders look at what happened to Spider-Man and Sing 2, and they're like, yeah, we'd kind of like a shot at those numbers. You can't make that money on streaming for a single film. Now, is it going to be movies like West Side Story or Belfast that are going to make those movies, those kind of numbers? No. And I do admit there might be a future, and this kind of scares me a little bit, where movies like The Last Duel, which are fantastic, they might not stay in theaters for very long, or they might just skip theaters altogether just to put on streaming. I think that's a mistake. I think putting movies in theaters, it goes a long way to making a movie feel prestigious, if you will. And I just like the experience better on a personal level. But who knows? This is definitely very encouraging news for AMC, for the theaters. And we'll have to see what Cinemark's earnings are. I don't know when they're going to announce them, but that'll be interesting to see what kind of year they had. But yeah, I think the movie theaters are definitely back. And the next couple quarters, I think, are going to be even better, because the Batman's going to do well. For sure the Batman is going to do well. And, I think people are ready to go back to the movies. I think they're ready to go back to the movies. But that's where we are going to end this particular conversation. What do you think? Do you agree? Do you disagree? I would love to know. Comment below, like, favorite, share, subscribe, and as always, flame responsibly. Have a good one.